Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading view with over 190k reputation points. In this video, I'll speak about USD CAD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we know is that we have a market which at the moment is at a very strong monthly demand and support zone. In fact, this is an area at which you would expect the market to create a higher low if it wants to continue with this monthly uptrend, because what we have here is the previous monthly resistance from which all these previous rejections to the downside were created, which the market then broke to the upside with this impulse. And what we know is that in the market, when you have a previous level of resistance and that level then gets broken to the upside, all that previous resistance becomes support. And we also have this trend line to the upside, which is lining up exactly in this zone. So essentially, we have a confluence of support area exactly here. And when you have a confluence of support zone, you have an increased probability of seeing strong institutional buying inside of that confluence of support. And we will be speaking about the institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market is inside of that strong confluence of support and demand, and drop down on the weekly time frame. From a weekly perspective, we can see that now the market is engulfing the previous candle to the downside, and it's starting to show strong buying pressure at the confluence of support and demand area. In fact, the market seems to be pushing to the upside quite aggressively, and we do have some resistance around this zone. This was the level at which we had this previous low from a weekly standpoint. That low then got broken to the downside. So that previous level of support, which the market now has broken to the downside, is turned resistance exactly at this level. So until the market will remain below this resistance, it can easily continue lower. So this will be a very important area to continue to monitor. Now, if we drop down on the daily time frame, what do we see? Well, first of all, I spoke about USD CAD just a few days ago when the market was around this area, and I explained all the reasons for which I was expecting this rejection to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But at the moment, what do we have? Well, before we dig deeper into what we have here from a technical perspective on the daily, first, let's go and see what we have when it comes to the commitment of traders, to what the big players in the market are doing, and let's look at the data precisely for the CAD. Now, the first thing to keep in mind is that if we are looking at the data for the CAD, we are actually looking at CAD USD because all currencies on the spot are traded against the USD. So if you're looking at the data for the CAD, you're actually already looking at CAD USD. So if you want information on USD CAD, you simply have to reverse everything. And what do we see if we reverse everything? So first of all, we can notice how net positions were decreasing for quite some time. We went from minus 67k, we are now at minus 93k net positions, even though we had a minor increase with the last report. In the long term, institutions have moved back to the bearish side for the CAD. And if institutions are shorting the CAD, as we have already seen, since the CAD is traded on the spot against the USD, they are longing USD CAD. So if institutions are shorting the CAD, they are obviously longing USD CAD because all currencies on the spot are traded against the USD. And we went, in fact, from having 83K shorts up to 112K shorts. So institutions are aggressively shorting the CAD, so aggressively longing USD CAD at that confluence of demand and support zone that we have previously identified on the monthly time frame. So USD CAD is getting strong. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you'll find linked in the description so you never miss new updates. Now back to the analysis. Now here in the daily time frame, until the market will remain below this resistance, it can easily be rejected to the downside. I actually would expect the market to at least print a couple of red candles away from this zone. Not only that wouldn't surprise me, I pretty much would expect to see a bearish reaction to this zone. But in the long run, if the market will manage to break above the zone, that is where I expect things to get interesting, because if the market manages to break above this zone, that is where we have the shift from having a resistance area at this level to having a support level, because again, this previous resistance would become support. So if we do get this break and retest, that is where there is the possibility to see more institutional longing of USD CAD. So if the market would break and retest, that is where I would expect more institutional buying at this level. We would also have some Fibonacci confluences, exactly this zone. So if the market would break and retest, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COD data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COD data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.